What we've seen in the prices of gold and silver over the past few months wasn't caused by the US and Australia. Along with other places around the world, people were waiting in line at coin shops. Also, the paper game can only take over the real market for a certain amount of time in the US and UK. Hey everyone, once more, it's Mike and Alan with the Gold Silver Show. Alan, how are things going? I'm fine. Mike, thanks. How are you? Okay, before we start, I just wanted to tell everyone that the silver market is a roller coaster, especially those who are new to it and may have just bought some silver and then seen it drop so dramatically. You need to be ready for it. It's an investment for the long run, and these are the times when I add to my fund. It's best to try to be different from the crowd when it comes to price. You have to be very brave to do it. I believe going against your feelings is not an easy thing to do. But part of being a good investor is keeping your feelings in check and not letting them run your life. What do you have for us now? Yes. Well, I just wanted to take a step back and tell everyone that the bull market isn't even close to being over. There is a certain amount of gold and silver in the world, and I thought we could look at that. Okay, so the first thing I have here is data from the IMF that shows gold now makes up more than 15% of the world's stocks. These banks know what's going to happen. You can print money, but not gold. They're getting a lot of it. It's not over yet. This is part of a trend that has been going on for a very long time. Yes, well, yes, but you can see that the trend started to speed up in late 23. It has been going on for a long time. You can print dollars, but not gold. That was in my first book, which came out in 2007 or 2008. Like you said, the point of this movie is that it's still not too late. Back in 2007, 2008, and 2009, it was better to buy gold. The longer we keep putting things off, the worse things will get. The bigger the highs, the bigger the possible highs have become because everything is going against what the dollar is going to do. It's like against, but also magnifying. That's right. And in a moment, I will show you a chart that does that. Okay, so next on the list of top assets by market cap is gold, which becomes the first asset in history to have a market cap of $30 trillion. That's really strange. Also, Mike, you just said exactly what I was thinking. There are a lot of dollars and you can print more. If you print $30 trillion, the market value of gold will reach $30 trillion. It's pretty crazy. Yeah, that was one of the main ideas of the first book. Gold always balances out the growth of a fiat currency supply. This has happened many times throughout history, so you can count on it. But it's all based on public opinion. And right now, people don't trust the dollar enough. Or I should say, they've trusted it too much in the past, more than it deserves. Anyway, this makes me think of a quote by Warren Buffett. The short-term market is a voting machine. The long-term market is a weighing machine. Also, the dollar doesn't mean anything in the long run. Since you want to buy something useful, you will need a lot of them. That's what we see here. Yes, yes. Yes, there is more news here. A 10-to-1 gold to silver ratio enables India to use silver as collateral for loans, making silver the world's second largest currency. Many people have said that this means the gold to silver ratio should also be 10-to-1. But I don't think this is accurate. So I just wanted to make that clear for our people. India is using metal as security for bank loans, which is what's going on. You can only put up 1 kilogram of gold as collateral, and you can only put up 10 kilograms of silver as collateral. That doesn't mean that the price should be 10-to-1 or that the value between the two metals is 10-to-1. Not at all like that. It would be the same as saying you could put up your house or up to 3 cars as security. In no way does that mean that the exchange rate between cars and homes should be 3-to-1. That being said, it's interesting that the bank lets gold and silver be used as security at all. I wouldn't stress out too much about the 10-1 number. Yeah, but I do think that's where it's going because silver is more scarce than gold and the world hasn't gone into a slump yet. And when we do that, 60% of the silver supply comes from mine metals that are going. They're very aware of the risk of a slump. When people start to rush toward gold and silver as money, silver is there to protect their wealth. That's when the quantity runs out at the same time that consumers want more. That's it then. That makes sense. We will have a picture of the gold to silver ratio in a moment. First though, a few quick announcements. It's time for me to thank everyone who has watched my new show, Hidden Secrets of Value. You can already watch the first 2 parts. That's really cool. A huge number of people have watched it. Alan, I want to be happy for you. These books have been in the works for a long time, but they are finally out now. This is great. Yes, thanks a lot, Mike. For sure, it's a nod to your show, Hidden Secrets of Money. That's okay. It won't get that big. Thank you very much. Also, thanks for giving me and many others ideas. Thanks for that. Yes, you and I will both be at the New Orleans Investment Conference. Alan will also be there, which no one knew until now. Come to the New Orleans Investment Conference and say hello to us. But look at how good the keynotes have been in the past. Steve Forbes, Gerald Ford, Norman Schwarzkopf, Ayn Rand, and Alan Greenspan are some of the people who have been in power. The fact that this list is so long shows what a great investment meeting this is. This is pretty much the best thing out there. Anyway, come see us from November 2nd to 5th. I think those are the dates. November 2nd through November 5th. Get your tickets now and we'll see you there. Okay, great. So Mike, you asked me to add the tool for inflation. Hey, this is Mike. Just a quick note. I'm glad so many new people have found our videos. But I do want to let you know that less than 15% of them have subscribed to the channel and hit the warning bell. Things are going to get rough soon. Make sure you turn on notifications if you don't want to miss any changes. Thanks again for clicking the thumbs up button. There is one more thing at goldsilver.com. For more than 20 years, we've been giving you the best educational material. We'd love to be your precious metals dealer if you'd like to help us with this goal. Now let's go back to the movie. Okay, great. Mike, you asked me to include the BLS's inflation tool since we were talking about 1980 when silver hit a high point of $52.50. The government says it is still worth about $218 today, so it can buy the same things. We're still not there, of course. We're now well below the all-time high when inflation is taken into account. This just shows how much longer the bull market is likely to last before we reach those old highs. Yes, silver is still a good deal, and the gold-silver ratio will show that. But I also asked you to do the opposite so that people could see where silver is now compared to its all-time high in 1980. Okay, let's check it out. There you have it. At 12, is that 61 cents or 80? 61. 61, yes. Okay, yes, we still have a long way to go. Another 4-bagger compared to the dollar, and that's just based on the CPY. Without a doubt, that amount is not even close to what real inflation is. Yes, you have used a tool to make a spreadsheet that sorts of splits the difference between the old CPI and the new CPY. The truth does seem to be in the middle. But what was the rise in prices? I don't remember how the price that took inflation into account compared to the original Shadow Stats CPI. Didn't it cost almost $1,000 an ounce? It could have been between 1999 and 2000. I need to look at the list to make sure I remember right. But yeah, that does make no sense at all. But remember that this is how the government used to measure inflation. People from the government give us those numbers. Yes, that's right. Let's look at what I did and the gold-silver ratio. Everyone is used to seeing the gold line as the normal gold to silver ratio. Instead of 1 ounce of silver, the silver line shows how much it costs. I put 100 ounces of silver on the scale. That way, we get whole numbers instead of 0.05 or 0.06 or something. They are whole numbers, though. You can see the circle of wealth and the symmetry here, which you found, Mike, and which seems likely to end at some point. Of course, we don't know what day it will happen, but it looks like it will reverse at some point. When it does, silver will do much better than gold. Yeah, like I said, it takes monetary demand, and we've seen the start of that. But what's interesting is that the price changes of gold and silver over the past few months haven't been driven by the US. People were waiting in line at coin shops in Australia, and the same thing was happening all over the world. Also, the paper game can only take over the real market for a certain amount of time in the US and UK. Exactly the same. This is the same chart, but it is shown in logarithmic form. Mike, I'm not sure if you want to say anything about this. If not, I need to show you another chart. Well, it just makes this income cycle and the level of reversion more clear. This is where we are now. Okay, what's the next chart? The next chart shows the percent of gold to silver in gold. It's the same. We saw it. But I've also marked on the right scale the size of the chance for silver to catch up to gold and get back to the all-time high or all-time low based on your point of view. When gold to silver ratio was 14 to 1, it was the highest it had ever been. Now it's around 80 to 85. This image was made a few days ago. The number seems to be around 80, which means that silver would have to do 5.7 times better than gold to catch up. It doesn't say when or how many years it will last. That wasn't it, but it would have to do 5.7 times better in the long run to catch up to the old gold to silver ratio. Yes, we're at about 85 right now as this is being written. I did the math again, and the answer is that 85 split by 14 is 6.07 times. That's more than 6 times the leverage. As I said at the start of the movie, it's been a wild ride. So make sure you strap in before you get on. That's right. Where are the safety belts? So, yeah, this is a great chance for silver. Yes, this is a tweet from Luke Groman. The U.S. government debt has grown by 8.5% since 2008 when it was first added together. Now, it's true that the national debt has grown by 8.5% per year since 2008. And Rick Rule points out that gold has grown by 9% per year over an even longer period of time. To keep up with the Bill Gold, yes. For the record, one of the main ideas in my first book was that gold could track the growth of the money supply. This is an example of how well it does that, and it has done it many times before in history. That's why I decided to stick with it when I found out that gold had always done this and seemed like it would continue to do this. At that point, I went and, I used to tell people I was fully diversified because I owned both gold and silver. For many years, that was my only investment. Gold and silver. People thought I was crazy, but it turned out to be the best performing asset class of this century. So, as I keep saying, there are very few times in history when precious metals are not only the safest investment, but also the investment with the biggest potential gains in buying power. Of course, I'm glad you've been saying that because that's where the idea came from and how I learned to put together my resume. Thanks for that. In other words, this goes back about 25 years. When we think about the future, we need to ask ourselves if we think the U.S. government will be even more in debt. If so, do we think the price of gold will show that? Because you can buy gold that will be delivered in 6 years on the gold futures market. Okay, that will happen in June 2031, and it will only cost $4,600 an ounce. Probably a deal. Isn't that crazy? Yes, it looks like that number is missing a digit. Should we